Is the seller death grip on the Minneapolis housing market finally starting to ease up? Well, it sure looks that way because we've got some more listings than we did at the start of the year and more houses on the market than we did last summer at this time. Inventory is creeping up in nearly every county and every category. But here's the weird part. Even though it's still technically a seller's market by the numbers, after the past few years of total chaos, it might actually feel more like a buyer's market for a lot of people, or maybe just for me because I'm the one that's in and out of it all day long. If you're just stepping in for the first time in 7 years, you won't care. But if you're wondering whether it's time to make your move, let's break it down. I'm Mary Schumann. I am a realtor here in the Minneapolis area, and if you're wondering whether now is the right time to buy or sell, I have a fresh market update for you today. We'll talk about why it is still technically considered a seller's market, why it feels more like a buyer's market than it has in a long time, and what's really happening behind those for sale signs. So let's dive right in. So right now, our 7-county metro area in the Twin Cities, we are sitting at about 7,300 active listings. And what that is, why that's significant is that it's 31% more than we had at the beginning of the year. So that's a big change. And it's also about 1,000 more homes than we had on the market at this time last summer. So that means that tight grip that sellers have had on the market is finally starting to loosen up. Almost every county is now sitting at more than 2 months worth of available housing inventory, with the exception of Anoka and Ramsey counties. They are both still under 2 months. So that's the north side of the city and St. Paul. But Carver County is actually at over 3 months supply. So that's the place to go if you want a deal as a buyer. And if you're a seller, you're just going to have to think about the fact that you may be on the market a little bit longer. And just as a quick reminder, what month's supply of inventory actually means, we actually consider that 0 to 5 months worth of housing inventory, if nothing else came on the market, would equal a seller's market. 5 to 6 months is a balanced market, and over 6 months is a buyer's market. So by the numbers, we are still in a seller's market at around 2 months worth of inventory. But after these last few turbocharged years, it feels a lot less intense overall, at least to me. If you're moving here from out of state, you actually might be surprised by how our market is. In some places in the country, homes are taking a very long time to sell, and buyers have a ton of leverage. I saw a recent news article about the fact that 78 of the major U.S. markets, real estate markets, now have more inventory of homes than they did before the pandemic. That is not quite the story here. Are multiple offers a thing of the past? Absolutely not, especially if you're looking closer into the city or at homes that are what I would consider a 1 out of 10 condition, which means absolutely mint. Those homes are still getting multiple offers right now, and you'd be probably competing pretty hard for them, especially if they're existing homes. By competing hard, I mean going pretty well over asking price and doing whatever you can to make your particular offer shine by comparison to your competition. If a house isn't staged well in the right location, priced right, or it needs some love, it is likely to sit a little bit longer and you'll see some negotiation come into play. And that is a big shift from where we were not too long ago. All right, so let me give you a quick peek at some real data from my transaction coordination company that I work with, Home Free TC. And just a reminder that if somebody's employing one of these companies, it's because they're a busy agent, and that means that they are serving a particular group. So this is a skewed sample of busy agents and what they are seeing their offers and what accepted offers look like for these agents. All right, so 15% of buyers are waiving inspections, and that is down significantly from the crazy days when it was about 40 to 50% of offers waiving. I am so glad that's not the case anymore. It was just nerve-wracking for me. Cash offers are still going strong at 21%, and the old standby of a conventional loan is coming in at 70% of the financing. The average purchase to list price is coming in at 99.7%, which means most of the homes are selling just a hair under list price, but the median is still at 100%. So if it's priced well, you're paying asking or probably above if more people want it. 28% of transactions included sellers contributing to buyers' closing costs in some form or another, and only 4% of the offers had escalation clauses. And I will say that we're kind of in the midsummer slump a little bit. We hit that. It picks back up a little bit in fall, and then we drop off again in winter. So appraisal gap coverage showed up in about 8% of financed purchases, which means they're not seeing like the way over ask offers that we saw in such great quantities before. So that's definitely dialed back a little bit. All right, so let's look at how different segments of the market are behaving. So we're going to look at single family homes in the 7-county metro area. They are at a median price of $415,000, which is up about 3.8% year over year. They are getting offers really fast too. The median days on market is just 2 weeks, including inspection, meaning that homes are going under contract within the first week on the market. New construction prices are up nearly 5% year over year, with a median price close to $600,000 at $595,000. But because there is more supply than demand in that area, it is one of the areas that you're going to see more of the ability to negotiate right now. Condos are still really flat. They're hovering right at about $200,000 with lots of supply keeping these prices in check. Townhomes are also steady with a median price around $310,000, and those are taking about 30 days to sell. And that means they're sitting a little bit longer and giving buyers more room to breathe. All right, so what does this mean if you are thinking of buying or selling your property now? If you are a seller, things are still in your favor by the numbers, but not necessarily by the vibe. So don't assume that you can rake in top dollar just by planting a sign in the yard. You really have to prep your home well, price it smart, and make it stand out. If you're a buyer, there is more to look at, less panic buying, and opportunities to negotiate that didn't happen just a couple of years ago. So things are loosened up. You don't need to like walk in and like offer in the first 10 minutes. You get a couple hours. It's especially beneficial if you're looking at new construction properties or things that need a little bit of TLC. And whether you're buying or selling, this is why it pays to have an expert guiding you through the process. They help you put yourself in the absolute best position to succeed in achieving your goal, whether that is getting a home and beating out competition or positioning yourself well, or even knowing if this house is overpriced and you shouldn't offer that much, or if you are a seller, making sure that you're priced right, the home is prepped, that you're going to get the most money for your home in the fastest amount of time. So if you have questions about this market, or you're looking for a custom strategy for your particular situation, or you just want to chat about how it all affects your plans, please reach out. My contact information is in the description, and I absolutely love talking to people that meet me on YouTube. I'm going to link my home prep list down there as well. So if you are thinking of selling, you can see like some of the things that you should do to start getting your property ready to go. Thank you so much for watching, and have a great week.